VC ecosystem knows how to make money.
Today, I'm joined by Nader AlBastaki, a former entrepreneur, corporate banker, public sector strategist, and now the managing director of Dubai Future District Fund, also called DFDF.
The government part is an absolute necessity in order to enable a lot of the innovation that's taking place. Impact, no matter how you want to drive it, has to be sustainable in its efforts.
From co-founding startups to leading strategic initiatives at the Dubai Future Foundation, and now backing innovation through venture capital, he brings a rare blend of founder empathy, policy insights, and investment vision.
Number one, I think that the healthiest thing anyone can do is network relentlessly.
Do you believe that the unicorn status is the ultimate definition of success?
Can I be academic here and say it depends?
Nader, welcome to Impact Talk.
Thank you for having me.
It's my pleasure. So let's dive into DFDF. And I want to ask you, my first question is, what makes DFDF different from a traditional VC fund?
So at a very high level, we were created with this vision in mind. I mean, at the end of the day, everything that the Dubai government gets invested into and creates is to encompass this idea of how do you complement what's out there in the market. The market's here to work, to play, but to create this whole listen, hear, enable, that's where the government comes into play. We've been created as a vehicle to invest, but also to amplify voices of the venture capital ecosystem to the government sector, but also disseminate back from the government sector down. So as a fund-to-fund primarily investor, we're there to work with GPs, so general partners and fund managers in general, to enable this ecosystem to grow, to deliver on making Dubai a venture capital player globally, not just regionally as well.
And DFDF is an evergreen fund. Can you explain, what it means and what are the practical advantages that for that model for Dubai's innovation ecosystem?
So the beauty of the structure is that it enables a lot more than just playing there with your typical fund cycle. The idea of evergreen means it has no end in sight, or it has this sort of idea of it's there to deliver a promise, right? What I was saying earlier is this enablement part doesn't have a time bound to it. There are different nodes, different enablement tools that take a shorter time, a medium time, and a longer time to enable and actually see through. And the idea of having an evergreen structure allows us to not only provide capital, but provide capital that's there to continue to deliver on a promise that's there to stay. So this patient capital sort of story allows us to put capital and create sort of what we like to say are sort of these corridors or these enablement tools where, for example, if it takes time and effort to create cases for them on a policy perspective, or on a regulatory perspective, on other different nodes that enable venture capitalists to do what they do best, it takes time and effort to do that. And if we're a short-term player, you can't always see that through. The idea of having this structure in place enables us to work alongside the GPs, not just for one fund cycle, not for two fund cycles, but on an ongoing perspective that keeps us representing the government in check to enable that to happen.
And you said DFDF is a fund of fund, and you invest both directly and through your VC funds. How do you select the VC partners you work with?
So at the very high level, what we're trying to achieve over here is an ecosystem play. So we're at the end of the day here trying to use what we use best. And we are the government of Dubai backed, right? So that is what we have a lot of levers as an entity to unlock, right? For the GPs that we play with or participate with. And the idea there is they're also looking for that kind of support and enablement as well. And it's a partnership at the end of the day. So that the GPs that we're talking to and the ones that are in scope for us ideally have a presence in Dubai, have a presence in the MENA space, and ideally are looking to us to enable a little bit more of Dubai, but also for us, it makes sense for us to enable more of Dubai for the ones that are participating here. So a regional presence makes sense. An active participation in collectively as a partner. At the end of the day, this is a partnership. How we enable each other to promote the ecosystem, to grow the ecosystem, to unlock the unlocks that we can together create. So that's a major part of that. The second part of it is we're trying to enable what we call the D33 economic agenda strategy. So Dubai has set out a 2033 agenda on economic policy, amongst many other things, and stimulus specifically. And within that, there are areas of focus, namely around property, which is a massive sector over here, around mobility, around healthcare. And there's a couple of other sectors around, obviously, the circular economy, around AI and deep tech, finance, blockchain and Web3. We're here to ensure that not only is the government pushing that agenda across the board, we're enabling technologies to propel that even further. So we're looking at where these fund managers are. So ideally, they're here. Number two, what they're participating in, where they're investing, what sectors, what underlying portfolio companies they have. Because ultimately, you said it earlier, right? We're not just a fund-of-fund player, but we want to double down on the portfolio companies of our GPs that are in the sectors of focus at a governmental level, at an economic agenda level, that we'd want to make sure are capitalizing on the government initiatives, and we're aligning to that as well. So sectoral specific sort of alignment to government areas of focus, but then ultimately they're here and in the marketplace.
And what about the sectors that DFDF focuses on? And what about sustainability, including climate techs, you mentioned circular economy or even, social ventures. Is that part of the scope of DFDF?
Yeah, at the end of the day, everything that we look at has to have an element of, is it prudent? Does it make sense? But of course, I mean, I did mention circular as part of our areas of focus. Everything has a scope in terms of government initiatives and where the areas of focus are, but also does it make sense on an economic perspective? So we're constantly looking at what parts of circular make sense, whether it's building materials within the construction tech space, whether it's around the supply chains that make up a vast majority of the businesses here, whether it's around mobility and logistics. So the idea of what parts of circular is all around where does it have the largest impact, where does it also impact operational gains, efficiency gains, top line growth, when you look at the marketplace here and where you see this almost double bottom line to the approach that we have. Is it profitable? But also, does it have a massive sort of GDP impact, as well as aligning with a lot of these goals that we're trying to achieve at an overall government perspective?
I was watching a couple of your podcast episodes. And you mentioned several times that DFDF's goal, and you said it just right now, is to drive social, technological, economic, and environmental impact at the end of the day. So how do you measure success beyond financial returns? And do you have any specific KPIs to track your impact?
So at a very high level, I mean, there's a few components to this. So one of the things that we are is a fund of funds. So what does that mean? As an institutional government-backed entity, when we're investing into partners, into fund managers, the idea there is our dollar needs to have a multiplier effect. If we're investing, are we enabling for more investments to go into the underlying funds? Are they seeing a multiplier effect to the dollars we're putting in? And that means showcasing the region, the funds, the venture capital ecosystem as a whole by participating in talks, by participating in awareness building around the ecosystem, which enables us to have that multiplier effect. So one of the items that we're holding ourselves against is, for every dollar we're putting in, how many more dollars are we enabling into the fund managers that we're investing in is a major part of it. And that ultimately means they get more capital to then deploy back into the marketplace. And what does that entail? That entails new companies, job creation, but more importantly, on the other side of it is jobs are one part of it, creating them, but what keeps them sticky? What keeps them in a position to retain those jobs? And that's where we're constantly looking at. It's not just the size, but how much of that is staying and growing. So retention is a massive part of keeping us in check and keeping that pulse on, are we creating jobs that are sustainable and here to stay, not just jobs and then they disappear tomorrow. So that goes hand in hand with the sustainability of the ventures we're going in, the health of the ecosystem, and the continuity of the ecosystem, which creates the two sides of that, the inputs, but then the continuity for it to continue to grow and remain. And beyond that, I mean, at the end of the day, staying close to our fund managers, making sure that we're enabling a lot of the work that they're doing, they're enabling a lot of the work we're doing, and this partnership of what works, how can we sort of take in inputs constantly, have this constant engagement of what makes sense, where can we grow, and constantly develop the ecosystem together.
How many funds managers do you work with?
So currently we have within our portfolio 12 fund managers, and that number is obviously going to grow over the next few years. And the idea is that we want to constantly grow from that number. So yes, we've deployed into 12, but that doesn't mean our relationships end there. The relationships that we have are with the entire ecosystem for multiple reasons. Number one is not every fund manager is raising at the time that we're looking to deploy. So those relationships matter for the time that they are looking to fundraise and looking to develop a partnership that includes us being a check provider. But beyond that, everyone has a part to play in this whole ecosystem, from idea stage and being active investors in the pre-seed space, going to market and finding the right that fits for a solution to then start scaling up. There are people that play an active role in each one of these sort of parts of the maturity curve of each venture, right? Until we start scaling and growing. The investors that come in earlier complement the ones that come in slightly later, and vice versa, right? They're the deal flow. Those are the offsetting partners and the ones that set the stage for the next series of tests for the venture to grow and develop, right? So that continuity is important to us, because the health of the ecosystem is all around the capital stack and how they play together, and that there's enough capital there's enough participation there, that they're all working very fluidly with one another to complement with one another. So sitting on a board of a startup, a big part of the job there is, yes, grow, develop, provide guidance, but also prepare one another for the next series of capital. What are those investors looking for? What does it take to develop to that stage? Does it take market growth? Does it take cross-border growth? Do we have the partnerships to enable that? Who can we leverage for that? That could be bringing on people that are at the same stage that complement you with other strengths. So it's not about just pre and post the stage that you're in, but it's also around, at the same level, who brings the most value to be on the capital stack with me together right now in order to get to the next stage as well. So a lot of that, part of it is for us to see, is there enough of that happening? Is there enough pre-seed fund managers? If not, how do we look to develop more and seed more emerging fund managers, for example, to potentially fill in the gaps that are there? If it comes to sort of the scaling part, do we have enough fund managers there? Is there enough capital there? Are there enough expertise on the ground there for those next level sort of scaling effects to take place? It might be knowledge related on a sector specific value added capital perspective. It might be on corridor effects of how do we enable new markets, for example, and making sure that health is there across the board.
I want to touch upon a little bit impact investing with you, Nader.
Sure.
So according to the Global Impact Investing Network, only 2% of global investment assets were deployed in our region. From your perspective, do you see a growing interest and capital flow toward impact investing across the region?
So, at a very high level, I'll dissect the word impact on a couple of fronts.
Yes.
Impact, no matter how you want to drive it, has to be sustainable in its efforts. And in a region that has, right now, maybe it's too technical a term, but when the market is growing, I was going to use the word beta, but when the beta of a market, which is basically the overall marketplace over here, if it's in growth phase, it's attractive across the board because there's different parts of the value chain that's generating value, which is why the GDP overall is growing and why there's a lot of interest in the MENA region overall, because there's across the board growth. Now, how do you then translate that into where can you plug in that has the most value and the most sort of pointed sort of upside on both a financial perspective, but beyond the financial perspective. And I think we're blessed to be in a part of the world for a couple of reasons. The market is growing at an immense pace. There's a lot of government-led initiatives that are enabling a lot of this to happen. From the unveiling of the sandboxing initiative end of last year, that's enabling more innovation to take place here and to make sure that regulations enable those innovations to take place. There was an R&D initiative that was launched last year as well, which is the granting mechanism to go into academia, to go into pure innovation research, to go into pure research at its core. Research is very broad, and the idea is some of it can be commercial, some of it can be social, some of it can be the two of them put together. That makes a lot of sense, and those are the exciting projects, right? Is where there's that element of money can be made. There's a sustainable effort to it, but then in order to get there, you might have to take advantage of some of these initiatives taking place. The R&D and the granting system enables you to get to a point where you're innovating by design for a region that might need a different sort of tweak on an existing sort of product set or solution set. Number two is regulations might have to be tweaked. You take advantage of that. So the government part is an absolute necessity in order to enable a lot of the innovation that's taking place. The capital that comes in and what types of capital is coming in enables for it to develop and grow in order to have its impact on the different nodes that we're looking to provide solutions to. So I think we're blessed to be in a part of the world where there's a lot of growth, there's a lot of government support, and a lot of interest to develop and live here and develop out of here.
You touched upon, government support, but beyond that, I'm thinking, what other financial instruments or capital mechanisms do you think impact-driven startups, especially in the UAE, could benefit from?
So I touched on one, which is the granting mechanism. Yes. I'd like to see a lot more of that in the VC ecosystem and the government granting system to come in and enabling more innovation to happen where commercialization is at the core of the know-how and the expertise there. The VC ecosystem knows how to make money. That's what they're there to do, and we've been doing it for a while. We've been backing GPs that have been doing this for over 12 years in this region, some more recent. But the fact of the matter is they're there to commercialize, and that's what they do well. The second part, so having a granting mechanism in a space that sustainability is the core element of the entire business model, absolutely, I'd like to see a lot more of it. But beyond that, I think there's room for a lot more venture debt, a lot more revenue-based sort of debt instruments in general. So would love to see this complementarity to equity-based financing to take place, maybe at growth stages initially, and then over time start trickling down. But the idea of having complementarity to reduce, first of all, dilution for the risk takers on an equity perspective is absolutely necessary. They'll then be willing to take even more risk and go further down into places that haven't seen liquidity events, because now that appetite for further risk is more because there's complementarity to their capital stack. The other part, I guess, I guess would lessen the burdens, I think, is I'd like to see more guarantee schemes out there. Now, this could be through philanthropic arms. This could be through government-led initiatives. I'd like to shy away from government as a participant here, because there's more dependency, I think, for a lot of these initiatives to come from the government. But I'd love to see a lot more private sector philanthropic sort of activity play a bigger part in this sector and go beyond the traditional sectors that you see a lot more activity and their participation in the local marketplace over here. Having blended financing opportunities to, like I said earlier, around if you have a grant system, there might still be that middle ground of it's not commercial ready yet for the commercial capital come in. So some blended financing sort of optionality, or their capital come in that bridges that gap between pure sort of research and the path to applied research that then becomes commercial. So a few ideas over there, but I think across the board, a lot of that's already happening. A lot of those discussions are happening. We're seeing the unlocks of some of these initiatives around the granting mechanism and all that. I would love to see a lot more ultimately to make it a much healthier environment.
Yeah, I agree. And I think in the philanthropy space, we see it slowly also happening with especially the new UAE Special Envoy for Philanthropy and Business. So yeah, I wish, more is going to happen in that space. On this podcast, we like to challenge the traditional definitions of success. Do you believe that the unicorn status is the ultimate definition of success?
Can I be academic here and say it depends? So the reason I say that is in a growing ecosystem, you want to look at impact. You want to look at resilience. Like I said very early on, you want to look at the contribution towards meaningful sort of benchmarks, meaningful indicators on the ecosystem. Like, a unicorn is great, and I'll take a step back. But it depends for a couple of factors. For it to be a healthy return for a venture capitalist to put in that risk capital at the beginning of the day, they have to see the multiples on their money. And if it's a relatively profitable endeavor, more of it will go in. And what makes it profitable? The entry point makes it profitable. The cost to develop makes it profitable. The participation of the ecosystem makes it profitable, and ultimately exit opportunities make them profitable. And this all matters because it has to be win-win across the board for the founders, because they're putting time, effort, blood, sweat, tears into ups and downs, fighting these battles. But then also for the investors, because they're liable towards their investors ultimately to show them returns. They're taking the risk on these founders, and they need to go in at the right time, support at the right time, and enable all this to happen as well. And across the board, there, in my opinion, there are a lot of metrics that define success. Participation is a major part of it. Exit and the diversity of exit optionality is a big part of it. The number of liquidity events makes it exciting for more investors to come in at healthy amounts. If I come in and put in a 500,000 check and I see a 100x return, but the company sold at $200 million, $300 million, because the valuation points that I came in and the exit point were healthy, that was a healthy return for me. Did it matter that I was a unicorn or not? No, because I'm now going to invest more and invest more and invest more because it was a healthy endeavor for me. So it depends. I think unicorn is a great metric once you're mature, because maturity means everything along that cycle is done. But I think there are a lot of metrics to gauge health. And I think just having one metric of just the exit health, and you don't even know if that's exit health because the entry point here might be the most expensive market in the world. If it is, then a unicorn, is that enough for generating the healthy returns that you're looking for? Or is this a very healthy market in terms of entry points? Then a unicorn isn't even necessary for a healthy return. So it really depends. It could be a great metric, but the way I'd like to look at it is across the board, what shows health? And I think we've sort of touched on it indirectly throughout our chat.
So it's not your target, I would say, to focus solely on unicorns?
On a government perspective, it is, because ultimately, if you were going to put one number out there, it's an easy metric that at the end of the day, you want to have a smart objective at the end of the day. I mean, everyone understands that we all gather around and try to figure out how that happens. What I was talking about earlier was, in order to get there, is that the starting point? Or when you dissect that and you break it down, there are multiple things that enable you to have this healthy churn.
My last question, Nader. Most of our, audience are impact-driven entrepreneurs. What advice would you give, to those entrepreneurs that, might be struggling to raise funds or, face, challenges?
Maybe there's a couple of things that come to mind. Number one, I think that the healthiest thing anyone can do is network relentlessly. Go to every event, talk to everyone, and be open. I think one of the things, in my early days, I think on my second venture, there was a lot of keep my IP to myself kind of thing. What if I tell people? What if I show everything? And at the end of the day, you're only damaging yourself, because someone else is going to think of it anyway. Maybe not exactly, but the more you're out there, the more you network, or on a couple of perspectives, you get pokes at refining, defining, and better creating what you're doing. But at the same time, networking, it's all a game on network. One person connects you to one person, connects you to one person, and that could be your next fundraise. That could be your next big contract. That could be your next mentor, advisor, and you name it, because everyone is a big part of this journey. A friend, someone for you to break out and cry on the shoulders of. You go through all of that, and it's meeting people and seeing that everyone's actually going through the same journey. I think that's one part of it. And I mean, the other part is, I think we all say it anyway, is constantly go out there and build, measure it, think about the value proposition. At the end of the day, look, it might be a great idea. If no one's willing to pay towards it, then, there's a problem with, maybe it's amazing innovation, but you haven't either story told a value proposition or made it easy for people to understand the value proposition in terms of how you presented the solution.
That's one of the biggest challenges we have.
Yeah. Yeah, but I think top of mind, those are, I could go into other things, but I think those kind of replicate what mainstream would talk about. But yeah, I think to me, networking was the biggest part of getting through tough times or not, finding the right people and just having or developing direction. Maybe not everyone has the best inputs, but seeing people and their various lenses, you only get that by diversifying sort of those lenses and the kind of feedback that you could get.
Amazing. Thank you so much, Nader. This is the end of this episode. I know you're very busy, so thanks for making the time to come and share your insights.
Thanks for having me. I really enjoyed this chat.
Thank you. Thanks for tuning in to Impact Talk. Please, if you liked my conversation with Nader AlBastaki, don't forget to subscribe and leave us a review. You can watch this episode on YouTube. We have subtitles both in Arabic and English, or listen on all major podcast platforms. Just search for Impact Talk with Nadine Zidani. And until next time, keep driving impact wherever you are.